So I'm often asked about accrual versus cash basis accounting, right? And as Einstein said famously, if you can't explain simply, you don't understand it well. And I was actually, asked to explain that by a business owner, and to explain it in terms where it's clear to a non-accounting person, right? So here is, challenge accepted, and let's give it a try. So imagine you have a tradition, a Friday dinner, right? It takes you 1 hour for the dinner and 1 hour to clean up, wash the dishes, right? So the total time for the dinner is 2 hours, right? We're talking 1 hour eating, 1 hour cleaning up, 2 hours, right? So sometimes on some weeks you will eat and clean up the same evening. Some other weeks you will eat, let's say Friday, clean up Saturday, right? Wash dishes next day, hopefully, right? So let's see what it looks like under cash basis reporting, right? If we take an example number one, you eat and clean up on the same day. So Friday dinner time equals 1 hour eating plus 1 hour washing dishes, 2 hours, right? And that would be the report, right? So we see here on Friday everything took place. The total dinner time is 2 hours. However, an example two, if you eat on Friday and clean up on Saturday, your dinner time would be Friday 1 hour of eating, and separately it will be Saturday dinner time 1 hour of cleanup, right? So it will look like this: 1 hour you're eating, and then another hour you're cleaning up. So in the report form, if you see here dinner time, we don't know anything else. It looks like you had dinner time 1 hour on Friday, 1 hour on Saturday, right? Now under accrual basis reporting, same example. If you eat and clean up same day, so no change, right? Same 1 hour, 1 hour, total dinner time 2 hours. However, in example number two, we eat on Friday, clean up on Saturday, but even though in reality it took place on Saturday, the cleanup, we are, for report purposes, we're recording dinner time 2 hours on Friday, seeing nothing on Saturday, right? So the real event, eating, took place on Friday. Saturday was the cleanup. However, we are reporting it as if everything took time on Friday. So the logical question is why would be, well, what's the benefit, right? We do everything for a reason. So let's imagine you're an outsider, right? And you're looking at the dinner time reports, and you don't know about the cleanups. You don't know about, you don't know the breakdown, right? So if you look at the report and imagine, for example, you saw eating every Friday, right? But no dishwashing, right? And then suddenly you see one Friday or Saturday, whatever the day is, right? You suddenly washing all the dishes, 5 hours, 10 hours, whatever it is, right? So from your perspective, it looks like you've been eating every Friday, no dishwashing. But then one of the days of the week, right? Once a month, you're washing all the dishes. So to you, it looks like on that day, you're just washing dishes for some reason nonstop, right? So what does that all mean? You do not connect the activity of eating, and let's say in business terms, we'll call it revenue, having fun, money coming in, with the time it took you to clean up, right? So you don't connect mentally the revenue, the eating part, and the cost of it, the cleaning. So now revenue and associated costs that incurred to produce the revenue are not being connected. So for you as an outsider, you don't see the connection between washing dishes and eating, right? The revenue and the cost. So in accounting, it's called matching principle. And it basically says that any type of revenue must be connected to the expenses or costs that are associated with that revenue, right? It basically ensures that your income statement, or if your profit and loss statement or P&L, the revenue and the costs are connected within the same period, right? So, for example, within the same month, right? And then, of course, naturally, it will be within the same year, right? So, to give it a more business, life, real life example, but staying within, same simple approach. Imagine you have a wedding business, planning business, right? And the couples would come in, obviously prior to the event to plan everything out, to also to interview, see if you're a fit for them, etc. Right? Imagine they came in January and gave you a deposit of 20,000, right, for the wedding. So, but obviously, wedding is not taking time, plays the same day, right, or same month. So on the income statement, it will look like January you made $20,000, but there are no expenses, right? So the January looks great. Then let's say June comes and the wedding takes place, and let's say it's in June. So now you have to spend time on, or money on subcontractors to set up the event, flowers, food, etc., whatever the deal is, right? And now, if you look at your profit and loss statement or income statement, it looks like January was great, June was horrible. Why? Because January you received 20,000 revenue. In June there is no revenue; it's only expenses, right? So if I look at it, if I don't know what's happening, if I don't know anything about your business, if I just look at your income statement, it's going to look like you did something great in January, but mistakes were made in June, right? Because I don't understand that those two amounts are connected, right? So, as you can probably guess, the proper approach to give you a better understanding of how you're performing and your profit margins is to accrue the expense that is that the June expense, to connect it to January, right? And to give you a better idea of the event, right? Now so just to clarify, there are regulations regarding how the revenue is recognized, for example, especially in the software, SaaS, software service industries and other industries. So different regulations, and of course, if you have questions, reach out to me on LinkedIn. I will do my best to assist. But for now, let's keep it simple, because that will give you a nice knowledge base to know how to approach this. All right. So thank you very much, and we'll see you